This algo trading mistake actually made me $1,300. Isn't that crazy? A mistake making you money. Sometimes it happens with algo trading. I'm here to talk about it in more detail. Before we get started, hello, my name is Jacob Amaral. I build, code, and trade automated trading systems on the futures market with live capital for a return. If you want to learn more about automated trading, algo trading, quant trading, see the links in the description below. But yeah, let's talk about this mistake and kind of how it made me money. I'm actually posted this on my newsletter, so I'm just going to use that as the base. So what happened? So a couple of days ago, this was on, let me open this image up, September 16th. All right, so September 16th, I was in a short position for natural gas futures. Okay, I was in this position quite a while. I entered the position on September 9th. Okay, so this is a swing trading system. So I was short for multiple days. And what happened on open? So for futures, they open at a 6 p.m. Eastern time. Okay, 6 p.m. Eastern to 5 p.m. Eastern the following day, and they're closed Saturdays. So I was short this position, and a big volatility event happened. Okay, so 6 p.m. opened, and something with natural gas, some type of news event. I'm not sure exactly what it was, but some type of news event caused some volatility, and thus we saw a lot of orders and a lot of trades happening on natural gas. Okay, so 6 p.m. enters, it goes crazy. If we actually look at this bar here, this is the daily bar for natural gas. Let me move myself here. If we see this bar, we can see that it opened here on the white arrow. Okay, so that's where the bar opened at 3.04, just above it. And it actually moved all the way down to 2.86. Okay, so that's a massive move for natural gas, almost going not quite a full point, but getting close to a full point, which is quite a move in natural gas to see that. Okay, so a lot of volatility happened. We're seeing lots of orders, a flurry of sell orders, obviously, because the bar is red, and uh, I had a market order to exit. Coincidentally, my natural gas short position was supposed to exit, so buy to cover market was automatically submitted through my trading system that I coded. And guess what happened? That order got rejected. Okay. And yes, market orders can get rejected. So I'll show you what that rejected order looks like. Posted it here in our Discord too for our trading group. So we see this order here, rejected order type not permitted while the market is in pre-open. Order parameters are invalid. All right. And you can see that order was submitted at 6 p.m. and 4 seconds later. I have a slight delay with my trade copier to copy the trades. So it was 4 seconds after 6 p.m. Now you're probably wondering, whoa, Jacob, what does this order rejected mean? It says order type not permitted while the market is in pre-open. Well, the market is open, right? It's after 6. Futures markets open at 6 p.m. and you can start trading. Most of them do. I believe some softs and agricultures open at 8 p.m. like wheat, but most futures, NQ, ES futures, the stock indices, energies like natural gas, oil, they open at 6 p.m. Eastern. So why is it saying the market is in pre-open? Well, it is open. So from my years of experience with trading, this is a rejected order you get on NinjaTrader and other CQG products that use CQG as their data feed, where it says that the market is in pre-open, but what's actually happening is that instrument is seeing extreme volatility, lots of orders. And when that happens, the CME, the exchange, the Chicago Mercantile Exchange, can reject your orders while that volatility kind of cools off, right? And I talk about this in this newsletter post. You can join in the description below. You get a free trading system. The exchange, the CME, can reject orders, right? Even market orders, right? And most people watching think that market orders can't be rejected, and they can be, right? Not just limit orders, etc. So TLDR, a flurry of orders piled up. CME rejected my order, so my buy to cover was not filled, and I was still short, right? So this white arrow, I should have been flat. I should have exited, closed that short, but it didn't. I was still open. So what happened? I wasn't at the computer, all right? I was out actually playing pickup basketball in a tournament. So I wasn't here, right? And I got back later that day, or later that night, I think around 8 p.m. to check my VPS. And I'm like, oh, I'm still short natural gas. I should be flat, right? Because I looked at my algo and my algo said it exited, but my live account still had short. So I immediately manually closed my position. So I immediately bought to cover my contracts and I got filled on the blue arrow, right? So much better. right? So I did not get filled at the white arrow on open. I got filled at the blue arrow, okay, around 8 p.m. And I made a lot more money, $1,300 extra from that mistake, okay? I wish I got filled down here. You can see it. It went all the way down to around 2.86 or 2.87. I wish I caught it in time to get filled there. I would have made a lot more money, but alas, you can't always do that. So what does that mean? I made an extra 30 ticks because I was short on 4 contracts. It was about 1,300 bucks. So these mistakes can happen, all right? And I say it's important to check your algos. It's important to check your positions on market open and market close to make sure you're synced. Now, I did not. I did not this time. I had a thing. I had my basketball tournament, and yeah, stupid me, should have been available. I mean, it made me money, so it worked out. But sometimes mistakes can make you money. Sometimes they lose you money. And I found from my personal experience, it's about 50-50. So half of your mistakes that you make will make you money. The other half will lose you money. So how can we fix this issue of market orders getting rejected? So I'll keep this open actually. I talk about this. So could I have automated this through code? Yes, I could have. Okay, I could check for a rejected order and resubmit it and get filled. That would be obviously anyone watching would obviously assume that resubmit a rejected order. Totally makes sense. I have not done this yet because I am scared that if there's a bug, if there's an issue, it will infinitely keep resubmitting, right? Which can cause margin errors. It can cause a whole slew of problems of being in a position when you shouldn't be. So that's why I haven't done it, right? I just manually exit the position. Honestly, this doesn't happen very often. I get a rejected order maybe once every 3 to 6 months, so it's not a common occurrence. It will happen the more intraday and the more trades you're making because you just have a higher chance of a volatile event happening and you being in a trade. But it doesn't happen very often. All right, last time this happened was in January, so it's been 9 months since this happened. So I'm very scared to implement that type of fix. Maybe I'll do a separate video on actually implementing it or testing it. But so far, I just manually exit or enter. Sometimes you enter a position and you get rejected and you gotta re-enter. So in conclusion, mistakes can make you money sometimes, not always. Sometimes they cost you money where you should have been in a trade when you weren't, or you should have exited. All I'm going to say is make sure you check your positions on market open and market close. Make sure they're synced. We think that algos and automated trading systems handle everything correctly, and NinjaTrader and TradeStation and QuantConnect, they'll always handle everything correctly, and that's simply not the case. There's a lot of edge cases and a lot of issues that can arise that can cause you positions to be out of sync. What do I mean by that? So out of sync means that hypothetically your algo's in a position, it's long or short, but your live account is not, right? Your live account is not. So my algo was flat, not in a position on natural gas, but my live account was still short. Okay, so they weren't synced. So check your positions on market open, market close. Make sure that everything is synced up on a daily basis. It's something you have to do, right? You can automate it potentially by fixing rejected orders, but there's always going to be an edge case. There's always going to be, you don't know what's going to happen in the future, and you have to monitor them. That is the case in running algos. You're running real money. You should be monitoring your systems regardless. You can't necessarily automate that. So that's my video. That's a mistake. Made me $1,300. Sometimes it loses me money. Let me know in the comments below what mistakes you've made and how you fix them. I would love to know. Maybe there's some mistakes that I don't know about yet and I could implement into my live trading portfolio. That'd be good to know. But yeah, let me know what mistakes you made in the past, how you fixed them, if they made you or lost you money. Most of the time they lose you money. I'm very pessimistic. So this was definitely a nice surprise of me making money, but it doesn't always happen. I've made a lot of mistakes and lost thousands of dollars as well. But yeah, that's the video. We'll see you next week and have a good one, guys. Bye-bye.